Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be focusing mainly on the 60-day cycle and how it's playing out currently. I'll also be running down on some of the time frames, looking at the 3-month chart and the monthly chart as well as the weekly chart, because there are lots of interesting developments going on there, which we should all be aware of, because it's going to affect where the price for Bitcoin is going in the next few weeks and months. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. And as usual, before I begin, the polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions. Okay, we'll start off with the 60-day cycle over here. This is our framework that we've been working on for many months now, which has proved extremely profitable for me because of my swing trades, which I go through in the Bitcoin Miners Club that we've got here. But before we break down in the 60-day cycle, I did get a comment just recently, yesterday, from someone called Worldview, and he says here, I saw someone using a different 60-day cycle and he's actually predicted the move down. Yours might be too forward by about 10 days. Okay, so let me answer that. So first of all, thank you very much indeed to Worldview for bringing this to my attention. So this gives us an opportunity to answer this, whether these cycles that I'm going through are 10 days out or not properly aligned. So these cycles were created by this gentleman here back in 1997 to 1998, and his name is William Bressart. And if you scroll down here, it says quite clearly, cycles are measured from bottom to bottom. So if we have a look at the current cycle, it seems very obvious that the bottom was here. There is no other bottom here. So the cycle has to start from the bottom. And the previous bottom was over here. So the cycle started from over there. So from this bottom over here to this bottom was 70 days. So this was a 70-day cycle, and as I've said many times, we always have to be fluid and flexible, and the creator of these cycles, William Bressart, gives you a flexibility of around about the 10-day either way of the cycle. So this was obviously 10 days after the 60-day cycle, and the previous cycle was 51 days, so that was 10 days before the actual 60 days. And when we become fluid and flexible, these become very accurate, and you can see how these play out much better. So following William Bressart's instructions, we're going from bottom to bottom here. And the 60 days from this bottom here takes us to the end of the cycle, 60 days quite clearly on the 9th of May. So this cycle is not 10 days out, because that 10 days is already inbuilt with the flexibility of the system. So yes, this cycle can end after 50 days, and it can also end after 70 days. It could be 71, 72, but we mustn't get bogged down by the number of days. We must let the price action dictate our cycles. And this is very important, because if you say that, oh, the cycle has to end on 60 days, well, the cycles don't play to your narrative. What you have to do is apply your narrative to the cycles and make sense of it that way around. Okay, so with that out of the way, you can see quite clearly we're going from bottom to bottom, and wherever this bottom is going to be, and as I've mentioned many times, it could be here, it could be here, more likely in between these points around about these levels, because 25.2 level will be a very strong level to get past. But obviously with Bitcoin anything can happen, and we must always be aware of that. Something else to also be aware while we're on these cycles, that on the 3rd of May we have the Federal Reserve meeting, which will decide on the percentage increase in the interest rates. And currently the feeling is a 0.25 basis points, i.e. 0.25% increase in their upcoming May 3rd interest rate decision. And it says here quite clearly there's a 7 in 10 chance of a hike according to the fixed income futures, with a 3 in 10 chance of holding the rates steady. So this is where we're at. We're expecting about a 0.25% rise. And why that's important is that when we get that on the 3rd of May, that may well be a sell the news event, which actually brings the price down into the 60-day cycle following 6 or 7 days after that, before we get the new cycle on the other side. So be aware of that 3rd of May FOMC meeting to decide on the interest rate hikes. You may recall that in the last video that I did on Monday, we were up here at this point, and I alluded to this price action over here, and people seem to be surprised of this move to the downside. And I said in that video that we may get this downside over here, but after that this may be to take out all the longs up here and then move all the way back and create a new high, and then to create a new high at 32 to 34,000 before we come into the 60-day cycle low. So let me just play a little bit of the clip I showed you from last week, which was predicting this little move down here. I just want to show you something interesting, and that is that if you look at the price action in the current cycle over here, it seems to be following a very similar pattern to the previous cycle over here. So when we got to the midpoint here in January this year, we'd just made a higher high from the previous high before the midpoint, but that was followed by a small correction over here and a move to the next resistant point here, which created another higher high from these 2 points. So we had a right translated cycle, and then we had the big fall into the 60-day cycle red line over here, and that ended the cycle after 70 days from the beginning over here. Now something similar seems to have been happening in the current cycle. This is the midpoint of the current cycle. We've just made a higher high from the previous high over here, just like in the previous cycle, and it may be that just like we had a mini correction over here to the bottom, we may have a mini correction down to these levels shortly. However, that may give rise to the run up to the next resistant point, which would be around the $33,000 mark here. So we may do a similar thing before coming into the 60-day cycle low, possibly down to 25,200. So only time will tell, but it seems to be a remarkable similarity with the current cycle compared to the previous cycle. So as you can see, the current cycle is playing out very similar to the previous cycle. And the question really now is that just like we moved up from there to make this new high, will we do the same here? So that's the million-dollar question. We don't know, of course, but we must be aware that this could quite easily happen, because what this is doing now is shaking out all the impatient hands, the weak hands, and everybody's now expecting for the price to go much, much lower. So a lot of shorts are coming in, a lot of putting short positions, and the market is very good at taking all them out and shooting back to the upside. So we'll see what happens, but this is exactly what's developing over here. It seems to be following very similar patterns to the previous cycle. So over the last few weeks, I've been showing you on the Twitter page how the current price action is creating a divergence, because there's a volume that's been going down while the price has been going up. So there's a divergence on the volume, as well as if we scroll down here, we'll see that there is a big divergence on the OBV, which is the on-balance volume. So while the price was going up over here, the actual OBV, the on-balance volume, was going down. And if you want to follow me on Twitter, you can use the link that I've got in the description box below all of my videos. So currently, what we've had is something very important that's developed. So this was the triple divergence that we got. We got one over here, and the OBV came down. The second one was over here. The price went up again, but the on-balance volume came down one more time. So that was the double divergence. And the third one was from here up to that point, as I showed you on the Monday's video, and we were down here, so there was a divergence. But look what's happened since then. The on-balance volume has risen to actually invalidate this now. So what you've now got is a price moving higher, although it's much more steeper than the on-balance volume, which is a bit more flatter, but it's still rising now. So this bit over here in the last few days has actually invalidated this divergence over here. So this fall that we've got has actually now reset the on-balance volume, and that may give rise for the price to turn around here and go back to the original narrative that I've got here. However, there are developments on the weekly and the monthly chart which may be giving us a signal that this may not happen. So we always have to look at what the charts are telling us and take a balanced view. So while we would expect this kind of thing could possibly happen over here, we will have a look at the time frames and see what they're telling us. And I'll run through the time frames very shortly. So quite a lot of people keep asking me about my portfolio and what I'm doing. So I'll let you know exactly what my portfolio consists of. First of all, I don't invest in Bitcoin. What I invest in is the Bitcoin miners, because I feel there's a much greater opportunity in terms of the growth and the leverage play that we get on the Bitcoin miners. So just to put it into perspective, if you've been watching my videos, you'll know that since last year, as this price was coming down over here, I showed you around this point at the 17,500 all the various averages and all the various signals, all the other signs which was telling us that the bottom is in at around the 17,500. So if you go back to my channel and have a look at all the videos around this time here in June, you'll see that I was saying that this is more than likely with a high degree of probability, i.e. 75%, that the bottom is in. And my portfolio was actually reflecting that. So at this point, I bought in 75% of my long-term positions in the Bitcoin miners. And the reason why I kept the 25% is because, as I've said many times, you always have to be fluid and flexible so that if the price did go below the 17.5, that would be an opportunity to dollar cost average in at much lower prices. And this is exactly what we got when we got the FTX scandal over here. So this pushed the price much lower, and this was another great opportunity because although we thought the price was in here 75%, this gave us the opportunity to get the other 25% in. So this is where I was dollar cost averaging in into the Bitcoin miners. And since then, that portfolio has increased substantially right up to here. So I'm still carrying what I bought down here up to this point. And as I've said, that is a long-term portfolio for 2 to 3 years going out, because I believe we're in a bull market, and that bull market has approximately 2 to 3 years to run, all the way to the end of 2025. However, as part of my approach of being fluid and flexible, I'm going to be using my own strategy. And please remember, there are hundreds of strategies, and everybody's strategy has to be reflecting on their own unique financial position. And I'm only sharing my strategy. It may not be the best strategy, but it's the strategy that worked for me in the past, and I'm hoping it'll work for me in the future. So my view is that somewhere along the line here, we will get a top of the first rally after the bottoming out process here. And as I've mentioned many times in the previous videos, that top to me will be anywhere between 40 and 50,000. So around those levels, and I'll be telling you as they happen, I will be taking some positions, maybe 25%, maybe 50% of my long-term positions, and then take that amount off the table with a view to buy back at a lower price. So currently my long-term portfolio is 90%, and then I have a 10% portfolio which is actually just swing trades. And all those people who've joined my Bitcoin Miners Club, I use this amount to do the swing trades, and so far these 60-day cycles have proved extremely profitable for me, because the way I use the swing trades is that I use the 60-day cycle. So when we bottomed out over here, this was my cue to actually start doing some swing trades on the Bitcoin miners with that 10% of my portfolio. But now that we're in the second half of the cycle, I'm not going to do any swing trades, because I only do swing trades onto the long position, i.e. to buy with a view to sell. I don't engage in shorting the market, i.e. I don't sell something I don't have with a view to bringing it down here. So now that we're in the second half of the cycle, in the Bitcoin Miners Club, I will not be doing any trading until we get this price anywhere where we bottom out at the end of this cycle. And then the next round of swing trades for me will start with that 10% portfolio. So this is how my portfolio is actually structured. And if you want to join us on the Bitcoin Miners Club, which is a very rapidly growing number at the moment, the next round of swing trades will be anywhere around here, wherever we see the price bottom here. And if you want to get an insight into the Bitcoin miners and the great potential that's there based on the leverage play, then you can go to any of my videos and click the join button over here. As you can see, the cost is only $4.99 per month. And what we do with that is that we do a video for the Bitcoin miners every Wednesday. We go through the technical analysis of all the Bitcoin miners, the potential that's there, swing trades on various levels for each of the Bitcoin miners that we cover. And if you want to cancel at any time, it's hassle-free. There's no contract, no obligation, etc. And for the Bitcoin Miners Club members who are watching this video, I've got a special treat for you next Wednesday, which will be showing you exactly that when the price for the Bitcoin bottoms out, the first rally that we get, there are two averages that predict the top of that rally, as well as predict the bottom of that rally. So the top and the bottom, because we'll be using those as part of the swing trades that we do on the Bitcoin miners. So this was the first one where we got those two averages. The second one was at the end of the first cycle here, where we bottomed out one more time, the first rally. So the two averages predicted the top of that rally there and the bottom of the correction. So those were 2 points, and lo and behold, in the previous cycle in 2019, when we bottomed out over here, once again the same 2 averages predicted the top of this rally as well as the bottom of that correction. And those 2 averages are now lurking around here, and they will be telling us exactly when to play the swing trades one more time. So that's a little bit of a special treat. So I'll be covering those 2 averages next Wednesday. So okay, coming back to today's price action now, we're currently at 28,000. So we seem to have lost this level here at 28,200 with this candle. This is a daily chart, so it hasn't actually closed yet, and it may well wick back up. But the next level that we need to be aware of is at the bottom of these wicks here at 26,600, 26,700. Should we lose this level here, I would expect the price to be coming down to these levels and finding support. But then if we zoom out, we can see there is a channel over here. This channel, you can see quite clearly with a lot of support here, a lot of support, resistance, 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 a lot of support here, is extremely strong. So therefore, the top of that at the moment is around 27,600. So it may well be that now that we've went above it, we're coming back and finding support on there before we move higher. Obviously anything can happen, but we should find support on this trend line at around about the $27,500 mark for the Bitcoin price. And of course, if we lose that, then it should come back down to this level here at the 26,700. Okay, a quick rundown on the time frames. On the 3-month chart, if you remember, if you've been watching my videos, I mentioned this particular candlestick pattern development, which was the Hikake pattern on the 3-month chart, which I said at the time, extremely powerful, because once we get above this candle here, that would signal a big move to the upside. So this pattern basically consists of 6 candles. The first one being a red candle on the left-hand side, which is then followed by an inside bar candle, which is this one here, where the highs and the lows are contained within the price of the highs and the lows of the previous mother candle, this one here. And then the inside bar candle is followed by a lower high and a lower low candle. So these 3 candles set up the Hikake pattern, whereby in the next 3 candles, one of them has to get above the inside bar candle top over here. And we got that on the 4th candle, where we closed above it here. And that candle started in January and ended on the 1st of April, of course. And this is the candle that started at the beginning of this month here, on the 1st of April. And currently it's showing a little bit of an indecision candle, but we've got 3 months to run yet. And based on this Hikake pattern, we should see a big green candle over here. So my understanding is that before July, we should come and match this candle over here, which is around the $48,000 mark, which fits into the narrative that I've been giving you over the last many weeks now, that the first rally out of the bottom over here should take us anywhere between 40 and 50,000. Moving on to the monthly candles, here, I said to you at the time that when we were having a morning star pattern develop, i.e. a red Marubozu candle on the left-hand side, a small body in the middle, and then followed by a green candle over here, that was our signal that the price is going to move higher. And I mentioned this many times in my previous videos. A worrying development on the current April candle, because this is a bearish candle that should push prices to the downside. So we must keep an eye on this candle. Obviously, we've got 9 more days to go, and this can go anywhere really. So the secret with these candles is that you must never come to any conclusions until the candle has closed. So whilst it's showing a Gravestone Doji candle currently, it may end up being a very big green candle over here, or even go to the downside. So we'll have to just wait and see how this develops. Another worrying development on the weekly chart this time is that we've now got a tweezer top. So we had a big green candle to the upside, followed by a similar size red candle on the outside. And these usually, with a high degree of probability of course, have a habit of playing to the downside. So this may well be that it brings the price down into that 60-day cycle low before we move much higher. So we'll just have to keep a lookout on this. But once again, this red candle, we're on Friday at the moment, still got 2 more days, Saturday and Sunday. So this closes on Sunday night. And this may well push all the way back, creating a dragonfly doji candle, i.e. with a wick at the bottom and a little body at the top. So this can change any time. So once again, we must wait for this candle to close. But currently it's showing a tweezer top and that is a bearish development. Okay, so we'll leave it there. I hope you found value in the video, and if you did, then please remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.